Welcome to the deep dive. You might have noticed some interesting action in the Malaysian stock market lately.
Definitely.
The FBMKLI, it climbed to a two-month high, 1,582 points, just this Monday, May 13th.
Yeah, quite a jump.
That's what, 200 points up from the low back in April? Did that catch your eye? What's going on there?
That's exactly what we're digging into today. We've been looking at some recent analysis, trying to get a handle on what's really driving this recovery in the Malaysian market.
Right. So our aim here in this deep dive isn't just to, read out the numbers.
Yeah.
We want to understand the factors behind this upward move, maybe spot some opportunities that might interest you, and also look at potential headwinds, especially thinking about the U.S.-China trade situation and these new changes around AI chip exports. Okay, let's get into it.
So it looks like a big piece of this recent positivity comes down to the U.S.-China trade talks. Around May 12th, there were reports suggesting things were moving in a better direction. The U.S. market liked that. And then here, after the holiday, the Malaysian market surged on the 13th.
Right. And the key thing from what we're seeing was news that they both agreed to ease up on some tariffs. And those non-tariff barriers, too, the ones put in place after April 2nd. That sounds pretty significant.
It is. When we talk about non-tariff barriers, we mean things like quotas, regulations, inspections, stuff that can block trade just as effectively as a tax.
Gotcha. So it's not just about the money.
Exactly. And the big worry for everyone globally has been this risk of a really sharp decoupling between the U.S. and China.
Right.
That could cause huge disruptions. Think supply chains grinding to a halt, almost like, the MCO lockdown during COVID.
Oh, yeah, absolutely. We all remember that feeling, everything just stopping. So the idea that they might be stepping back from that edge, well, that's bound to make investors feel a bit better.
Definitely. And you see that renewed confidence filtering into the Malaysian market. One analysis called it a surprise U.S.-China duo live investors' confidence.
Huh. Interesting phrasing.
It sort of echoes that fast bounce back we saw after the MCO ended, that V-shaped recovery.
That's a good comparison. So, okay, near term, what's the outlook? More stability.
The analysis suggests, a degree of stability.
Right.
Support probably holding around, say, 1,500 to 1,550 points.
Okay.
We might even see it push towards 1,600.
Yeah.
The chance of another big drop right now seems lower.
Yeah.
Partly because there's no immediate bad news, like U.S. inflation seems less pressured because they still have access to Chinese goods.
Okay, so the big picture looks a bit calmer. That's good. But let's zoom in a bit. Beyond the overall market, where are the specific, maybe growth spots for investors?
Well, with the market stabilizing, the focus shifts, doesn't it?
Yeah.
More towards individual company strengths, their growth potential.
Yeah, fundamental.
Exactly. Sectors to keep an eye on, definitely AI, data centers, and the semiconductor industry, especially up north in that new economic zone.
AI and data centers, they feel like they're everywhere now. What's Malaysia's edge there? Why here?
Well, Malaysia's been working hard to become a regional hub.
Yeah.
We've got, decent infrastructure, government support, skilled people, plus the global demand for AI and everything needed to run it is just exploding. And we're also seeing foreign money coming into Malaysian stocks as part of a bigger global shift.
Interesting. So international investors are noticing too. Any specific triggers coming up soon, things that could move stock prices?
Yeah, keep an eye on earnings reports. Lots of Malaysian companies will be releasing theirs through May. Good results could definitely give some stock prices a boost.
Right. Earnings season always tells a story. Now let's talk about this US AI chip thing. That sounds like it could be a really big deal, couldn't it?
It really could. So around May 13th U.S. time, May 14th for us, the U.S. Commerce Department decided to basically pull back those restrictions on AI chip supply they announced back in January.
Okay. Wow. So a reversal. What's the thinking there?
It looks like they're changing tactics. Instead of these broad buckets like allies get chips, restricted countries don't want you, they're moving towards tighter controls on the specific chips themselves. The exact details on how they'll control the chips, well, that's still coming out.
So what does this mean for Malaysia? Sounds potentially positive for our tech goals.
Potentially very positive, yes.
Yeah.
Those old restrictions could have really choked off our supply of the advanced chips we need.
Right.
Especially for growing the data center industry, which is, seen as vital for economic growth here. Getting rid of those countrywide limits could remove a major hurdle. Access to chips was definitely a threat to that progress.
Makes total sense. You need the hardware to power the AI revolution, basically. So if this opens things up, what might we see? More investment?
Could be. Renewed interest in Malaysian AI and data center stocks, for sure. And something else. Malaysia is one of about 20 countries with a trade surplus with the U.S.
Oh, interesting point.
That potentially puts us in a good spot for trade talks. Maybe, just maybe, Malaysia could negotiate some guarantees on AI chip supply in return for, other things.
That would be smart positioning. Okay, let's shift gears. Something seems to be going the other way. The IPO market here feels a bit cooler. What's the story?
Yeah, that's the trend we're seeing. Upcoming IPOs seem to be lowering their prices, like that Korean water filter brand, maybe launching as Kugo, apparently looking at a lower price. EcoShop also cut its IPO price recently.
Why the cuts? Investors getting nervous about new listings.
That seems likely. After the market dipped between February and April, maybe the appetite just isn't there as much. Some companies that plan to list might have even just hit pause. So these lower prices now, maybe they were overpriced to begin with, or maybe there just isn't enough demand at those higher levels right now.
So it doesn't automatically mean IPOs are cheap bargains now?
Not at all, no. Actually, if you look at the IPOs from this year, the numbers aren't great. A fair few on both main and ACE markets closed below their IPO price on day one.
Wow.
And even more are trading below the IPO price if you look a few weeks or months out.
Ouch. So much for the idea of IPOs being easy money. That perception seems pretty outdated right now.
Exactly. There are risks involved. It's not a guarantee. And importantly, there have been warnings about IPO scams doing the rounds.
Oh.
Yeah. Be really careful if someone offers you IPO shares with no money down, no collateral needed.
Right.
Real IPO subscriptions always need funds or some kind of backing. Always double check. Be suspicious of offers that just land in your inbox.
That is a crucial warning. Thanks for highlighting that.
Okay, so let's try and wrap this up. Key takeaways from our discussion today.
I'd say first, the Malaysian market seems to be finding its feet, helped by that easing in U.S.-China tension. Second, there's real potential in AI and data centers, but it's kind of tied to how these U.S. chip policies shake out.
And third, the IPO scene is definitely more cautious. Investors need to do their homework.
So a lot of moving parts: global trade, tech policy, local market mood. It definitely gives you things to think about. So here's a final thought for you, our listener, to chew on. With all this going on, how might your long-term investment strategy for Malaysia need to, adapt? What new chances might pop up, or what risks should you be watching out for in the next few months? Something to consider. Thanks for joining us on this deep dive.